We know the world's bifurcating. That's been on the cards for a long time. It's accelerating a bit now. It'll slow down for a period of time. And the US dollar is the most powerful thing the US has, aside from its military. Why the hell would it give it up? I mean, it's just zero chance. Why would you give it up to Bitcoin? It's just not going to happen. Does Bitcoin continue to gain adoption? Yes, but it's not going to gain adoption from the US. And we're going to transition to Bitcoin. It's a false narrative.
Do you think they'll maybe change their stance on regulation if the conversation around it moves away from consumer protection and more to national security, which seems to have been gaining some traction right now?
Again, I don't see how that helps national security, Bitcoin. I can understand why it helps sovereign individual security, because, the seizing of assets. I mean, what happened? These Russian oligarchs, they've taken all of their assets without due process. This is not good.
Yeah.
This is not good.
Bitcoin dropped below $41,000 for the first time in about 3 weeks, sliding back further into the range in which it has traded this year on mounting concerns about rising interest rates. Macro guru and former Goldman Sachs executive Raoul says the stage is being set for the next wave of crypto adoption. Also, the chances of another sell-off event are inherently low. Hello and welcome to Money Talks. In today's video, Raoul talks about volatility across markets, role of Bitcoin and other cryptocurrencies as an inflation hedge, and geopolitical tensions in Eastern Europe and the impact on global economy. So without wasting any time, let's dive right into the video.
My head remains with my core framework, which has been we are still in a disinflationary world, and that interest rate rises are self-limiting because everybody's too indebted and the aging population, and that trend in bond yields, I call the chart of truth, where bond yields go down over time, holds. That is currently the least popular view from most people. Everybody, and I've interviewed everybody that I know and really respect. Just did an interview with James Aitken, Gerard Minack, Kirill Sokolov. They've all changed their macro view. They're like, structurally, we think there's long-term inflation. And their view is, we think there's long-term inflation because of the amount of spending that will happen to transition to ESG, and there's not enough commodities to deal with that. Absolutely true. That supply chains are coming back to regionalized, so people need to build new factories. And I think that's true too. I still think that the demographic story is larger and that demand for commodities is driven by the economy itself. And so I know it's fiscal stimulus, but at the margin, if households spend less, then the price of commodities comes lower. I think overall, I still think commodities come lower than here. The big question for me, I think we're headed towards recession. Now, again, as ever, everyone's saying, well, this time it's different. The forward part of the twos curve doesn't suggest interest rate cuts. The 3-month, 10-year is not inverted. There's always but this time. I generally look at all the forward-looking indicators that I've been using for the last 20 years. Most of them are weakening, showing weakening growth. I don't have many things that give me a recession yet. So it kind of feels like 2006, where the yield curve remained inverted for a period of time before the actual bad news comes. Okay, how do you allocate money here? And that's where, well, what do you do? Short the bond market? Well, it's already pricing in 7.5 hikes. Do you want to buy commodities here? No, because it's priced in a lot. What do you want to do with the equity market? It already went down 30% and then rebound. It's really difficult to know what to do. And seasoned professionals are going, I don't really know. Gold didn't do anything. It was supposed to be the great recession, great inflation thing. Well, that failed. It's been fascinating.
Cryptocurrencies are still trading, well, at least Bitcoin still seem to be trading as a risk asset.
Yeah, so what the only sense I can make of it is NASDAQ and crypto bottomed roughly similar times. That's because they're expecting slower growth. And so that for now seems like a good allocation. The dollar seems that it should go higher, but it's really hard to allocate assets in this. To me, it's expected in Europe. I knew that they wanted to do this on wallets. It's yet again Europe making bad decisions because they love regulation more than they love entrepreneurship. And so, somebody pointed out, look at the largest tech company in Europe. It's SAP. SAP is a company that was like a huge tech company in the late 90s. They've not developed anything because the regulatory framework is so bad. GDPR was really hard. I understand what they're trying to do, but they're creating a state that doesn't allow for innovation. And here we go, again, making it more and more difficult. Sure, I mean, do I care about KYC in my wallet? No, I don't. But it's just at the margin, just doesn't help Europe. We're still talking about Bitcoin, Ethereum, Solana, and all those, and those will be important. What these guys are talking about is the applications layer, how it goes to the masses. And that is really interesting because it affects businesses like Real Vision. It's going to affect everybody, the music industry, the book publishing industry. And I've been following that narrative in Raoul's Adventures in Crypto because that is the mass adoption phase. And it's going to be huge because I'm involved in it and I see it everywhere. Dollar yen is breaking out of a 20-year basing pattern. It had been a very non-volatile currency. And this is the largest savings nation in the world with the highest debts in the world and the oldest population in the world. And suddenly you get a 7 standard deviation move in this currency because they're printing more money into an inflationary episode, which is what yield curve control is. And it hasn't confirmed the bigger breakout, which would be 125. But whether that goes through now or goes through in 9 months' time, whatever, there's something going on. And the same is going on with the euro, the 30-year trend in the euro. I understand the euro wasn't around 30 years ago. Bloomberg and many others extrapolated back with the basket. That whole trend is around 110, which is why we've been fighting with that level. If it breaks there, I mean, the euro can go to 80 cents. So there's something about these highly indebted nations with zero interest rates that can't raise interest rates and seeing inflation that is causing the currencies to collapse. A strong dollar is not good for the world. It's a wrecking ball as well because it blows up emerging markets. What happens to the RMB? I don't know. Does the Japanese money pile into the European and US bond market because the currency's weak? Probably. Does that stop yields rising in the US? Possibly. These are really big things, and it's not clear yet, which is why I say, and I said in the tweet, and again, you hear me say this a lot, I don't know, but just watch it because these kind of things blow up things.
The largest cryptocurrency in the world, Bitcoin, fell as low as $40, retreating for the 7th day in the past 8. Since peaking at just above $48,000 in late March, Bitcoin and other tokens have been dragged lower by concerns about tighter monetary policy. Even the buzz around last week's Bitcoin 2022 conference in Miami wasn't enough to reverse the trend. Also, U.S. inflation likely accelerated to 8.4% in March, the fastest pace since early 1982. Expectations for tighter monetary policy has hurt demand for riskier assets such as cryptocurrencies and tech stocks, which are increasingly moving in tandem. Other top tokens also dropped on Monday, with Polkadot sliding 8.7% and Ether down as much as 7.9%. Now that the sugar rush of Bitcoin 2022 has passed, Tuesday's ugly U.S. consumer price report is a reminder that the Fed is caught between a rock and a hard place when it comes to tackling runaway inflation without sinking the economy. Bitcoin also dipped below its 50-day moving average. Still, Bitcoin's tendency to move in sync with assets such as U.S. tech stocks makes the drop less of a surprise after a tough week for American markets. Its correlation with the Nasdaq 100 index is now back at record levels. So what are your thoughts about Raoul's take on inflation and all the pressures associated with it? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.